Hi there, it's Paul from Hurricane Forex. Hope you're very well. So basically this is a really basic introduction to the system and also how to set it up. So I've never done this how to set it up thing, and it just occurred to me that I really should. So anyway, here we go. So firstly, what we're going to do is open a blank chart. Okay, and it doesn't matter what it is. So, and then the next thing to do, I've already done it here, so you can see I've got the Hurricane Forex Indicator already running on the chart, is to get it how you want it. So you stick the hurricane, so that's the one you'll have, onto here, right click the chart, okay, go to template, save template, and choose default. Okay, it won't be there, you'll probably have to type it in default save. So that means that any chart you open will be opened with that template. The next thing to do is to go off to our Discord group and grab this indicator, which you can get for free, called Open All Charts. Okay, here, and I just drag that onto this chart and it'll go a bit crazy. Let me just bring the options up. You don't have to click on any options, just let it run. Don't touch it. If you're on a slower machine, it might say that it's timed out, and then you get a message like this saying that it's finished. Obviously this one's not going to. There is complete, thankfully. Okay, so now go back to the first chart that you set, that's this one here, and close it. That just makes sure we haven't got that indicator hanging around. Now you're ready to trade. Yay! So what do you do next? So the next thing to do is to wait for signals, and that will come up in the form of a pop-up, which will give you a signal, one of these things. So when one of these little arrows appears, you'll get a signal. And the next thing you do is not trade it. Okay, first thing you do is to evaluate the market that you're getting. Okay, so for instance, let's say I was getting a buy signal here, I wouldn't be taking it. And the reason I wouldn't be taking it is because, firstly, up here in the corner, this would say market is flat. Okay, so we wouldn't be interested in that. And secondly, it's actually a bearish market. So you can see that the white line is sitting below the blue gold line. So it's going blue, gold, buy, sell, buy, sell, buy, sell. And then all of a sudden, we get this signal here. And we can take that one. The reason we can take that one, obviously, is because it's a bearish market. So the blue gold line is above the white line, and we can get into that trade there. So that our first trade, the target is so this is the first fib level. That's the place it's more likely to bounce. And then the second fib level's here. So I stick my take profit just above the second fib level, and normally it'll hit it. In fact, it hit it here. Okay, and then you stay out of the trade. There's no more signals. The next signal hits in here. The first, in this case, it didn't get to the second, it hasn't got there yet, to the second fib level. Now the reason for that is actually due to the situation, what's going on in the market, especially with this is gold, in fact, especially with the dollar. And so, you know, you do tend to get this, you've got this thing where it's bounced off of there, and but if it hits that first one, I'll move my stop inside my entry anyway, so it stops out in profit, which is a bit annoying. And here's the second one, and you can see it's bounced on this level. So you might say, actually, I'll take profit here rather than going all the way to the second fib. In fact, at the moment, the markets are incredibly flat in certain areas, so I am taking smaller target trades. However, to take the smaller target trades, my risk reward has to be right. So to take this sell here, my stop needs to be above here, and that's a bit difficult at the moment. So I'm just going to start a little program that I forgot to start. I'm actually running on Linux, on Zorin OS Linux, and so I need this little tool. So yeah, if I wanted to take, let's take a look at this trade here. So you can see my stop would need to be there, and my take profit I'd want to have here, because probably the risk reward, if we entered on that candle, you can see the risk reward is going to be too small for me to aim there. So I might want to stay out of the trade or have a further target. Now then, you've got to manage what's going on with the trade, in the sense that if it just bounces off of this level again, then you're stuck with it. So you need to use the tools you've got as well. So if you see like look at this, it ran up here, it bounced off of there, here's my sell trade. That's an ideal trade, because you've had a big rally and then the bounce off like that. So let's go through some other charts. So here we've got an interesting situation. So the market actually changed direction here. You can see how it's not a really good example, but this kind of this will be flat. So up here it will say flat at this point. Okay, and you can see, so you stay well out of it. Don't get involved in flat markets, all right? Because, you know, you'll not get anywhere. If you're going to do that, you need to be targeting the first fib level from your entry, which will be nothing. So you probably have no trades. However, what happened here, you can see how the white line crosses or heads towards the blue line. In fact, you can take a short here because the price has moved all the way across between the white line and the blue line. Let's try and find a better example. Here's a nice example of it again. So you can see how there was a rally up. This was news based. It rallied up to actually this area here, this fib level here, and then it rocketed down and actually broke. So we wouldn't have taken the long probably anyway, because although we might have, because it's a really big move up, but we actually are looking for shorts here. So we'd be interested in taking this short here, not these longs, because the market's in a bearish move. The white line is below the blue gold line. So when it's blue, it's actually bearish. When it's gold, it's bullish or uncertain. And same the other way around. So if the white line was above the blue line, so we'll try and find one. This is a nice bearish trend here. Same sort of thing. Look at the entries: sell, 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 sell. Generally, if I see a sell signal on this pair, which is Aussie yen, I will take it. Okay, I don't mess around, and I'll take it quickly, because a weak bearish market means your target's going to be a bit less, so you're probably only going to make it to the next fib level, but it's worth a go. And this is a bullish market. You can see how the gold line and the white line and the yellow line, they're all kind of lined up. So you only want to take buys. However, you can see it's got a double top here, so it's bouncing off this fib level. I just can't get past it, so I need to hold out until I need to get a better buy signal. So I probably wouldn't take that one because it's really high. So my next target would be the 100%. It did actually make it up to about 50%. Sometimes we get them where they turn around in the middle of a fib level. So you can see what's happened here in between these two fib levels. It's actually turned around. Same thing in a sell. So here's a sell. So a lovely sell trend going on here. Wasn't always a sell trend, but there's a lovely sell trend now. Just pull this up like this. Just go back a bit. So it was in a big long sell trend. It went into a buy, which then broke. You can see how it moves. The first thing that happens is it moves across the white and gold lines into a buy. Okay, so if you were to take a buy there, you wouldn't take a buy there because there's a pennant there, so you probably expect it to go down. But you'll see how that white line has gone flat. So you'd see up the top it would say market flat at this point. Okay, so there's a buy here you probably wouldn't take unless you saw it going up between these two lines and maybe hit it. So it does actually hit the second level. You see how much it respects the fib level. About back halfway, here's your signal for a trade. Buy that, there's your target. It hits that and then it just turns around and goes back the other way. And you see how quickly the software responds to it. So it's bang, it's in a sell down. So sell, and you will get a signal there, and it'll be about somewhere in that candle. You take the sell. If you see it going into this area, you can take the sell, and it breaks through this level and all the way down to the second fib. So in volatile markets, you can get one or two fib levels. In slow markets where things are not moving very fast, you probably want to think about just aiming for the first fib level, but I normally aim for the second one anyway, just in case. Hoping to show you a trade that I've actually got on right now. I've got a couple on at the moment, or one or two on. So at the moment I've got this one on. Now you'll notice that it's actually broken this first little fib level here. This little green line here, that's a halfway fib level at 11.8%. And so I've moved my stop inside my entry and I'll just let it run now, so I can't lose money. If it pulls back and stops me out, I won't lose. Okay, and it is a weak bearish market. You can see how although it has been rocketing up and down, it's now settled into this kind of bearish move. I'd like to get to my full target, which is 127 pips, $1,200, but I suspect it may actually only get as far as this first this first level. There's a random trend line. I do get this occasionally where that's a brand new chart and it's put a random trend line on it. Right, okay, so back to this again. So I expect it to hit this first fib level, and then I'll take a decision on whether I close it. Depends on when it hits it. So again, you can see how we've got this buy signal, and there is a reason that this is a flat market. Look, market flat, so that's a good breakout, but there's no signal on it, so I'm wary of taking it. Okay, because it may just be a breakout. In fact, it does look like it's just gone to the 78.6% and it's pulling back again. Right, so always try and trade with the trend. If the market's flat, don't only go into it if you really have got a good bullish move or bearish move out of the flatness. Right, and sometimes that can mean patience, and you need patience. So, and you'll see there's a little gold dot above this red signal. That basically means the change of a trend. So you see the last one was a green, a buy signal. So that's got a sell signal with a dot above it. That's a change of direction as far as the indicator is concerned. And then you've got a lovely sell entry there. You've got one there which gets you halfway to the target. You've got a sell entry there. You've got a sell entry there. This one, your stop would have to be up here, but your take profit would be down here. So that's kind of okay. Moving swiftly on. So just down here, so you can see that, and this, look at this, you see how these flat markets, so you just stay out of them. Now if you get a signal like this, again, you could enter it, but what's the risk? It's just been flat for ages, so you need to keep an eye on it, and then bang, it goes and breaks out. And that was mainly because of news. So if you've got an important news event happening, then you want to be thinking about, normally, okay, my rules for news is as simple as this: FOMC and non-farm payrolls I will still steer well clear of. And the reason I still steer well clear of it is because they tend to cause whipsaws, which means that if you are in a trade, what happens is the margin, the spread, this thing up here, rallies up, and even if you're doing quite well, you can get stopped out. So I stay out of it. This actually is quite an important thing to watch. This spread tells you whether it's good to trade or not. So you might look at a pair and the spread's like 20 pips. That means there's something going on and you need to stay out of it. Because that means you've got to make 20 pips profit before you even make a cent or a dime or whatever. So again, we've got this. This is just incredible. So there's this little sell here, and in fact, here's an Aussie Swiss sell. Let's actually take that. Have a look at that trade. So first thing I would do is find the Aussie Swiss trade. There it is. Now I've got an entry there. Is it a bearish trend? Yes, it is. So I'm going to just. It is a little bit flat, so it's a weak bearish trade. So I'm going to do a new order. Let's just do this. So just sell it there. Okay. Now my stop comes and needs to be above here. Okay. Now my take profit, if it's here, is going to be too close. Okay. So that would be a 1-to-1 ratio. Actually, that's kind of acceptable if I wanted to head for a 1-to-1 ratio. And I'll just pop it there for a second, and I'll move it to where I want it really. So you'll notice, firstly, it is breaking this level here. Okay, look at it, you see it going, you see how this signal, there's a signal here, and it's like pulled back a little bit, and now it's going, the Aussie Swiss is going this way. So sell there, pulls back, and it pulled back near the first fib level here. It's broken the first fib level, and now it's broken this level, and so my first target would be the 61.8%. My second target, the 78.8%. Now notice I put it above that. Don't put it exactly on it. And the reason is because it tends to bounce somewhere there. And now I just leave the trade. I used to do things. You can, if you want to, put a trading stop on it. One way of doing it is actually to put a trading stop on the distance. Let's just measure it. Get this. Measure the distance between here and the entry, which is 301 points. So you go into the trade you've got on. Let me just have a look. Here's some trades I've got on right at the moment. So we go into Aussie Swiss, we right click the trade, we do trailing stop and go to custom, and we'll just round it up. So I'll just bring this off the other screen. So I put it at like 350 points. So that means that when it hits that first fib level, okay, it'll move the stop inside the entry and make it safe. Now I'm not going to do that because I've got to the point these days where I know if you watch some of my older videos, you'll see me putting trading stops on and things like that. I've just got to the point where I don't do it. I tend to actually, yes, what I tend to do now is I tend to just put the trade on and let it run. Okay, unless there's a big news event coming up that I think is going to break my beautiful trade. In fact, you'll see I've got a Euro Swiss already on, so the Aussie Swiss actually fits in with the Euro Swiss sell. And I know some people say don't trade two of the same thing, but I found it to be quite effective, especially if you get a lot of the same signal. So if I suddenly get lots of trades buying the Swiss franc, then I'd be more tempted to take it. But you can see how clear the charts are. Look, New Zealand dollar, US dollar. big sell trend on the New Zealand dollar, US dollar. So we only take what sells. So I completely ignore this buy here. I completely ignore it because we're in a big downtrend. Although you see how it goes flat and it pulls up. That's actually that's probably a little pennant there. Yeah, that's a bearish pennant. So in fact, the bearish pennant kind of starts there, and it kind of goes up, down, up, down, up, down, bang. Okay. So if you do see this kind of formation, a bearish pennant means that it will basically move the same sort of distance that was in there. It carried on and it made its targets. I'm not afraid to trade overnight either. Happy to leave things on overnight. I'm a bit wary of it, but it depends what's going on overnight. Here's a really interesting one. So we've got a dollar Swiss short. Okay, but it's a strong bullish. It's been a strong bullish trend for a while. But see how the short has broken this line, and it looks like it's actually breaking out bearish now. So I'm tempted to now take a trade on that. Let's sell it. Okay, and I'm just gonna, only because it's heading down. It's broken this trend has gone. Okay, that move has broken the trend. In fact, there's an M. You get these occasionally, and like this. So my feeling is that I can set my targets. I'll set my targets into the second fib level. There we go. And I'll put my stop probably just above this candle. I'm not going to put the stop above the M because there's no point now. If dollar Swiss carries on, now remember, let's just go back a stage. I already bought. I sold Aussie Swiss, and I'm selling Euro Swiss. So it makes perfect sense to go for the dollar Swiss sell as well. And you can see that they're going into profit now. And I've got a really nice trade going on the dollar Swiss. I'm 340 US dollars up at the moment on that on the trades today. So I can just wait for that now and just be patient. You know, the temptation is, and a lot of traders do this, I know, because I used to do it, is when you get a losing trade, okay, when you get a losing trade, the temptation is to let it run all the way to the stop, which you do, or you move your stop, which is even worse, all right? And when you get a winning trade, you see it's winning and you panic and close everything because you don't want to lose the money you've got. But the point is that, let's say I entered this trade here, there's my target up here. Does it hits the target. Trade here, there's the entrance, target here, it hits the target, you know. And if it doesn't make it, it'll normally make it halfway anyway. And so in some ways, you could, especially if it's doing this, we could set it to be halfway through the second fib. That's perfectly valid because the risk reward is right. If you've got a situation where you haven't got valid risk reward because of the fib level, then stay out of it, obviously. But now, you see, I'll let that run. I'm not going to touch it. I've just got to the point where I just don't touch them. There's just absolutely no point. You just go crazy. So yeah, that's basically it, I suppose. So yeah, you'll get the alerts. When you get an alert, go and have a look at the chart, see where things are. You know, like in this one, it's in a big bullish trend. Okay, you can see by the gold line and the white line. Look how it respects the white line. It bounces off it again and again and again. Okay, so when I get the next buy signal, I don't like this buy signal here, and it does look a bit like an M, like a reversal. But to get a reversal, we need a sell signal that pushes right the way down into this area. So if it's driving into an area that it hasn't been before, then that's basically where it goes. So, okay, hurricaneforex.com. So to get the indicator, you can get a free demo, but you can only run it on the MetaTrader backtesting thing, which isn't really very helpful, especially because we have like loads of different charts open. So if you want to test it, so basically it's $30 a month, which isn't much, but it just buys me drinks, and or you can buy it outright, whatever. And join the Discord group, even if you're only thinking about trading with it. Please join the Discord group, and because you can get the free open all charts utility, which is quite useful if you're trading with other indicators, and a bit of support if you need it. Just part of it, you know, come and join us. Okay, so to get all the details, including the Discord group, hurricaneforex.com is the website, and I think I've covered everything. Have I covered everything? Oh yes, down here this is just longer term trends, so you can see what the trends are looking like, and that's MACD trends on the different time frames. So if you've got something that's all red there, don't think about buying it. Okay, thanks very much. That's all done.